Test, test. Hey, what's up, everybody? Jeff Beers here from 40 Finance Channel. Today's a big day for me because PayPal just reported their earnings, and I'm basically going to look at the results live with you because I had a couple other things going on and I did not get a chance to fully go through them. We'll also have SmileDirect Club today, which is by far one of my worst investments, and it looks like it got a lot worse today. And then Trade Desk is a stock that I've been kicking around, and they had a great quarter, and that led to me adding some shares of my Magnite, which is a stock semi-related to Trade Desk. So I thought I'd look at Trade Desk too here on this live stream, and if any of you guys are out there, I'll try to share my 2 cents on any stocks that you're looking at. But let's jump into the headlines here. And I'm just going to skip right ahead to PayPal so we can take a look at this together. Usually Seeking Alpha does a pretty good job of summarizing things right here in these bullet points. So I like to use them for my quick earnings news. PayPal gains 1.5% in after hours after Q3 earnings topped the average analyst estimate, and the payment firm says Venmo users will be able to pay with Venmo on Amazon starting in 2022. So that's very good news, and I happen to be an Amazon stockholder, so that trends out fairly well. Our third quarter results show solid growth on top of a record year. We're thrilled. We're teaming up with Amazon, blah, blah, blah. Pay with Venmo at checkout. PayPal sees Q4 revenue up to $6.95 billion, less than the consensus of $7.24 billion, and Q4 EPS of $1.12 versus $1.27. So that's coming in less than consensus. But in case you've been living under a rock, a ton of stocks are doing this, right? So it feels like analysts are projecting way too high. And I, as you guys know, follow analyst projections quite a bit. But it does appear in recent earnings reports that I've been following that a lot of companies are not comfortable projecting at the same level that analysts are. Now, some companies sandbag. That's a pretty well-known fact that they'll say Q4 revenue is going to be this. Internally, they're saying, maybe they think it's going to be $7 billion or something like that. So hard to tell with PayPal. I would say with PayPal, given their track record of hitting sales and earnings, which is pretty high, it's like in the 80s, 80+% over the past couple years. I would say they're probably sandbagging slightly, if that helps at all. So I'm not worried about this consensus. It will change the fundamentals once analysts catch up to it because their projections will change with this news. Sees 55 million net new active accounts added in 2021, which is fantastic. And that was guidance of 52 million to 55. Q3 non-GAAP of $1.11, topping the average analyst estimate. It did decrease from Q2. That's not super surprising. Q3 is a weird quarter for a lot of things. And in PayPal's case, while we talk about Venmo a lot, don't forget how much e-com they do, okay? On almost every notable site out there, they are a big player. So don't sweat Q3 as much, but there's a lot of pressure on Q4, right? So that little bullet point there doesn't really worry me, the drop from Q2. Q3 net new active accounts of 13. So 13 million net new active accounts in the quarter. It's actually up from Q2. Ends the quarter with 416 million active accounts. It's pretty impressive for, basically a payment provider, right? Q3 of revenue, 6 billion, misses 6.23, and decreased from 6.24 in Q2. Not really worried about that, but rose 13% on Forex neutral. Transaction revenue fell from Q2, but it did increase from last year, so that's good. 4.9 billion payment transactions, all right? That's a big number, okay? Regardless of, excuse me, regardless of anything, that's a big number of payment transactions, and it's up from Q2 and up 22% year over year. Now, what's interesting is these transactions were up, but the transaction revenue from Q2 was down. So that might say something about the average cart size at checkout or something. You know, you can probably dig into that a little bit. I'm not super worried about it. Let's check on Venmo here. Venmo processed 60 billion in total payment volume, up 36% year over year, compares with 58 billion in Q2. So this is good. You know, there's a lot of people out there who are saying that Venmo is losing to Cash App. And I think that from an app download standpoint, they are slowing down compared to Cash App. But when you're up 36% year over year, I'm happy with that. All right, let's take a look. I gotta move my camera here. First, I'm gonna say hi to everybody. CBYB, thoughts on Venmo and Amazon? I love it. And I mean, if you were going to, let me see something here before I say this. So it'll be interesting to see if it's going to be the same test scenario that the buy now, pay later stock has working with Amazon. If it's just straight, like it's turned on across every checkout area and not a test like BNPL is, then that's huge. Now, typically, Amazon's so big, and if you have any familiarity with e-commerce and websites and stuff, you usually don't just launch something, right, and pray for the best. You usually do like these little 1%, 2% tests. But if they roll out and they're, let's just say, hit 1%, or excuse me, hit 100% by July 4th, then that's a huge opportunity, because you think about people who have Venmo cash, perhaps from their parents, perhaps from their friends, if they bought them dinner or something like that. That's huge that you can use those Venmo funds on Amazon. Certainly could turn into a pretty big deal. Lion95, wish he bought PayPal at 225. I think you're having a good year though, Lion, because I remember you asking about a couple stocks that you did well on. So I needed this one because I've had a bad earnings report. Just tuned in, bought some PayPal before earnings. Good news, bad news. It's to me, it's all good news. It is lighter on the guidance going forward. Some people might get shaken up on that. I personally would disregard Q3 in terms of pressure on the stock. It's all about Q4, baby. It's all about holiday sales, e-commerce, etc. That's the one that they got to hit. Lion got into Facebook at 3:15. Nice job. Palantir earnings tomorrow. Yep, Baba on the 21st. Also tomorrow, and I know I'm getting off PayPal here for a second. I was looking at this on this little calendar on StockTwits, which I'm not a huge fan of the conversations on their site, but it is a really cool earnings calendar. Got Unity Software, Palantir, Neo, Coinbase, Fubu. Do I own any? Yeah, I mean, I own Palantir. I used to own Unity. A lot of pressure on Unity to live up to this valuation currently. Workhorse, anything else in there? Helion for some people. Doesn't really do much for me. I think those are the big DoorDash, depending on your thoughts on that. Look at this. I mean, look at this list. This is a long one. Ring Central has been down quite a bit. They have really good fundamentals, but can't seem to drive their price higher. 2U is, I believe, a Chinese stock. It was very popular before the crash over there. Purple, some people are into that, which is mattresses and whatnot. So anyway, tomorrow's huge, man. Huge day. SeaWorld. So the reason SeaWorld is interesting to me is because of this potential travel bounce back that we're seeing in the news, and I'm starting to believe it, quite honestly, with the international borders opening up here in the United States. All right, I will do some more questions in a second, but I promised that we'd look at the bad. So I would say today, for me, this is the good. Absolutely, for sure, this is the good. Let's do an after hours check. Down 50.52%. That doesn't really surprise me with the lower guidance. But if you look ahead, I think when this Amazon news spreads, particularly if it spreads like some of these other sort of overhyped analysis can go sometimes, like it should be big. But either way, even if it doesn't, and let's just say PayPal goes down 3% or 4% because of lower guidance, does not affect my position. If you're new to the channel, this is my largest position. I believe in PayPal. I believe in their management, what they're doing. That's a longer term hold for me. Would I buy more at 229? Maybe. After this report, perhaps. But I have to think about it. If I do, it's going to be like a little 5 shares here kind of thing, just to pad on to the winners that keep winning. But we'll see. All right, so we talked about the good news. I'll tell you what the bad news is. And I'm not really surprised, but I'm surprised. SmileDirect, which I own, approximately, it's nothing big. I want to say it's 300 shares, right? Maybe it's 400. So I invested about $3,000 in this stock, and because of the pandemic, they had trouble shipping, they had all kinds of problems. And I really felt good about this world coming back, particularly at the price point that SDC plays at, but they can't do anything right. It's terrible. And revenue declining 18% year over year, while unique aligner shipments and gross sales price stood at 96K. We are disappointed, driven by macroeconomic headwinds that are influencing the spending, whatever that means. Modest sequential improvement in gross profit margin. Bottom line is, it's only 3K. I could technically hold on and wait for a miracle, but I just don't know if I feel like it, to be super honest with you. So I'm going to have to look in the mirror on this one. Do I just want to book the loss and take it? I'm certainly not going to buy any more. The short sellers are going to crush it on this one. But in relation to the PayPal win, it's a nothing burger in my portfolio, to be honest with you. TTD, I want to show you this one, then we'll just chat. TTD, Trade Desk. Some of you guys know that, let me just get this one. I own Magnite, which is a little bit different. Their Magnite manages inventory for some big websites, most notably some Disney properties. Trade Desk, is the marketplace that you can buy advertising on those host properties that Magnite represents. Now, Magnite did okay. They had a decent quarter, particularly for Q3. But they dragged down Trade Desk a little bit by not, coming in and saying we're growing 6 million% or whatever the expectation is nowadays. So I added to my Magnite. They did dip a little bit. I'm done buying Magnite for the future here. Sorry, let me just check this. But I was interested in Trade Desk when it dipped because it went down to $68, and I knew that they had this earnings report today, and they crushed it. So GAAP EPS of 12 beats by a penny, but the revenue plus 39% year over year, and this is in a time that people are starting to question maybe the growth of connected TV. Not will it grow, but just will it keep up the pace, right? Roku has seen a little bit of slowdown. Magnite didn't come out and say we're growing 60 million%. So this was a huge beat, plus 39%. There's not a lot here fundamentally to support the current price, but I think for myself, I would like to get in this one. I just don't know if I'm going to see it anymore after a 29% run up. So I'll just have to read a little bit and do some valuation analysis. One thing we know for sure, guys, and you can look at some other stocks to see this, these first days after earnings, when they do so well and they go up, 25%, 30%, whatever, that's obviously not the best time to buy, but let it settle, okay? Because what you'll see is these prices will come down maybe into next week. Maybe there'll be an interest rate scare. We've got a Fed meeting announcement on Wednesday, and it won't necessarily be a hit on the trade desk, but it could bring it down to a point. Maybe you save 10%, 15%. On the stock. But this one's square in my crosshairs, mostly because what do we know about fourth quarter and advertising, particularly in this holiday season? It's going to be competitive. We now have travel, which is going to roll into the advertising sector. And so I suspect the Trade Desk will have a good Q4. I suspect Magnite will too. Here's my take real quick regarding whatever online advertising stock you're interested in. Facebook, Amazon has it to some degree, Google, whatever. Keep in mind, okay, let's just go back last year. During the pandemic, it was a different group of advertisers where you would normally say automakers, fashion/retail, automotive, right? Those are going to be like your and travel. Those are going to be your four big dogs that can really float a company for a year. You get an advertising contract from Ford and you probably float your company for the whole year. Now, what do we know is that travel, automotive, and even fashion retailers pulled way back, and they're not back to par yet. That's my point here. They're not back to par. I anticipate whenever these automakers actually have freaking trucks and SUVs to sell, they'll be back in spades. Maybe that's spring, I don't know. Fashion and other retailers, I would say that they're back in gear, even if don't have the exact supply they're looking for. So I expect that spend to be up in Q4. Travel, we are in full gear. We'll have to see how that advertising goes. That would be very good news for Google, by the way, because the number of travel searches in Google is huge. So I don't care which stock you like that relates to advertising. It's not important. The most important thing is you stare at it and say to yourself, we got some big dogs sitting on the sidelines that haven't even started buying yet. And when they get in this market, prices going up. It's good for people like Trade Desk and hell, even Lions Facebook, right? It's going to be a benefit to them. So let me get a drink here. So we left off, let me just fix this real quick. So we left off on Lion talking about Palantir, and we went through some Palantir stuff. He mentioned CPI, Consumer Price Index on Wednesday, will also be important. I agree with that. I think we've all felt inflation. And it just, like, I guess my take with inflation, because I am in a lot of consumer-related names, is I think people can afford inflation right now. But the unfortunate side of it is that it's going to consolidate what people buy, okay? So I was doing some, this is funny, I was doing some painting for a new shed I got in my backyard. Dude, an exterior gallon of Sherwin-Williams paint, of which I bought 3, was $55 plus tax per gallon. I mean, that is absurd, okay? Now, to be fair, I don't paint very often, but I was shocked that they were getting that price. And people were, you know, there's a line of people behind me doing the exact same thing. So that's a good example to me. I walk out of there at whatever, $175. I'm buying, there's something I'm not buying on the way home, right? I need the paint, but maybe I'm not going to go to a sit-down lunch afterwards or whatever. It's going to catch up with certain things. I don't think the economy goes to zero. I just think that certain fringe benefits, if you will, get cut out of a lot of people's budgets. All right, what else do we have? Thinking about selling NVIDIA or AMD, but I will have to pay a big tax. So that's the conundrum. The AMD run-up today, see if I can get a news headline for you. So AMD and Facebook / Meta, or whatever they're calling themselves these days, they announced that there would be some sort of partnership as they build out this metaverse or whatever it is. Now, the stock spiked huge. And the only thing I don't like about those things is that, let's see if we can get it on here. Well, the short version of what I'm looking for is at the end of this big headline on other news sites, it's Lisa Su saying the details of the deal will be released on Wednesday, right? So stock surges, nobody knows exactly what this means, but it goes up 10%. And AMD it's not terribly overvalued, but it was at a really good deal at 100 or below, and now we're at 150. Would I sell it if it hit this? I don't know. I mean, a lot of it depends on what you need the money for. I would not be surprised if AMD comes down from this level. I think that this is exuberance, and people are going to talk it up without using data points and some sort of analyst article, right? They're going to say things like, this is going to be huge, which is a crap analysis because it's all about dollars and cents. So huge isn't a thing that we don't know. Huge for some people is finding $20 on the ground, right? Huge in stocks is billions of dollars. So I do think the long-term outlook for AMD and NVIDIA is very, very good. But between the two, So you said NVIDIA and AMD. Between the two of them, NVIDIA by far is the one that's the most overvalued. Now, to be fair, as we look ahead to the next few fiscal years on this table, they've got some good EPS growth, 62% coming in 2022. The out years are a little kind of hit or miss. The revenue for next year is plus 54, and then the out years are kind of hit or miss. So there's a couple ways. I'm not your accountant, blah, blah, blah. Igor, you know that, right? But I'll tell you how I would look at it. There's a couple ways to play this game of selling and taxes, right? So the one way that's not too far away is simply wait till January 1st if you're in the USA. First trading day, I'll tell you real quick. First trading day looks like it'll be January 3rd. So if you need the money, let's just say for a home improvement or a longer term project, sell potentially on January 3rd. Obviously, there's a risk that those stocks would go down from here. I get it, but you wouldn't have to sweat taxes till essentially, January, February of 2023. All right, so that's one way that you could do it. Another way that you could do it is figure out losses in other spots. So you can claim up to $3,000 in stock losses to offset your gains. So I don't know how high, how well you've done with NVIDIA and AMD, but let's just say you have SmileDirect like I do on the side. You can sell a loser up to $3,000 worth of a loser, and you'll get credit in America that will partially offset some of your gains. So as I get closer to the end of the year, I will make sure that I've maxed out all of my losses, and I'm sure SDC will be part of it. I sold something else that was a loser though for me at the time, Enphase and Unity, but I don't know if they combined to be 3,000, so I'll have to look at that. Anywho, those are a couple things to think about. And then, gosh, I wouldn't worry as much about AMD and NVIDIA going bankrupt or their stock going to zero. I would worry more about their multiple changing. And you're starting to get to this point on at least NVIDIA where you could maybe sell it and potentially buy it back after 30 days for maybe less, right? So that's another thing to think about. But you're smart to think about the taxes, and if you have not held the stock for at least a year, it would be the same thing as getting a paycheck from its normal income, right? So if you worked at a restaurant, it gives you a paycheck for $1,000, or your wages are $1,000, then they obviously take off the taxes. If you own NVIDIA for less than a year and you made $5,000 off the stock when you sell, it would be the same thing as getting a $5,000 paycheck that you haven't yet paid taxes on, if that helps you at all. So, sorry, I might sneeze here. Goodness. Sorry about that. But hopefully that helps. A couple tips in there. Igor, I'm not a CPA. I'm just telling you how I look at things. Danny, Fubu earnings. He's got 500 shares, $21 average, and he's excited. This is going to be a big one for Fubu. I'm not in this one, but we're about to find out if this sports service that they're doing is paying off, right? Because you either had a good Q3 or we have to question, exactly how things are working. Because what's Q3, right? It is July, August, September. So in that stretch, you would have seen NFL, college football, all beginning their season. NBA didn't start till October. You would have had things like the World Series if folks are into baseball. So Fubu, as they market forward as being, preference on sports or an emphasis on sports, they better hit this Q3 or else you can assume a major downturn. To your point though, Danny, being at $21, you got some room. You got some room, but I would be very scared if Fubu didn't hit Q3. My phone is annoying. Sorry, guys. I don't know why it keeps coming through. Forgot to mute it, so that's my problem. All right, CBYB, what are your thoughts on PaySafe? Do you think we will ever see 10? Can't break 8. I'm watching it in the background. They really disappointed me, probably in the same way that they're disappointing you. And I don't know. I mean, I'm looking at this. You got maybe double digits next year if you hit 13% revenue. Next year's supposed to be profitable, technically. The forward PE right now, if they hit 11 cents, would be a forward PE of 43. Take your pick. I'm watching it. I almost did buy it when it went down to $6 or something. What was that? Here's what I'm looking at, by the way. The 6-month chart. You had $6.91. I remember almost buying it there. But see, I have these other dogs like SmileDirect, and I'm just like, God dang, I'm getting tired of small cap stocks and how much they fluctuate. So, all right, what else? LD, how you doing? Lion, better off putting that 3K. You put an SDC into DWAC, which is Trump's SPAC merger. Yeah, from a momentum play, that would not surprise me if Reddit pushed that one. Thoughts on Uber? This is a good question because I've been kicking around Lyft. But beyond those two as a whole, I think that both of them serve as an underappreciated travel rebound play, right? So if international folks do land here in the United States, a lot of them are you go to like your New York cities and stuff, they're gonna be using these services. So I like those two, and I may very well get into one of them sooner than later. Pubmatic is the cheapest. This is for Efren. Pubmatic thoughts. Pubmatic is the fundamentally cheapest ad tech play there is out there. I did not read any recent news about them. They don't grow at the same pace as some of the others, but they do have an EPS, and they are projected to benefit from, the same things that TTD and Magnite have. For me, owning Magnite, I'm not going to own Pubmatic because there'd just be too many in the same space. However, it's not a bad play. Igor, do you still hold Netflix? So I still hold Netflix. It's in my mother's account and that I manage for her. Just not a huge one, but that has been a baller for me. But you're never going to see it on this show because it's in her account. So I bought in at $4.70 when I was doing those videos about Netflix underpriced and whatever. So I'm very super cautious with, I make much better decisions for my mom than I make for myself, I'll tell you that. And Netflix, so far so good, and I am still bullish for the future. Hard to get super excited after the recent run-up, but it's still a good stock. Cannabis breakout today. I saw that LD with the news, if you guys missed it, let me see if I can get a headline here. Here we go. And of all the people in the world, Republicans, which I don't know what I expected, but you know, they're leading this bill to legalize and tax marijuana as an alternative to Democratic measures. Very, very interesting. And it basically, if you read that report, you will see that, and it's down here on Business Insider and Market Watch, that there is an opportunity for some of that legalization to get fast-tracked. I do like it. And I've said it before, I don't know which one to buy, you know. I don't know if you should be a retailer or a farmer. I have to study it more, but I don't know how, let me see, like, I'm just looking up Tilray, guys, because it's just a name that I know. Doesn't mean I like it, doesn't mean anything. And here's your 1 year on Tilray. Looks like rocket ship to 63 for some odd reason. Let's go back to June. You're at 21. You're down to 12. And I'm going to make the broad assumption that most of them are, you know, their charts look about the same. And if I remember, Tilray, I thought they were closer to profitability than they are. But I'm probably confusing them for somebody else. Peers. Here we go. Canopy. This is the one I think I was looking at the other day. It's up 10% today. See their projected earnings. And they're not profitable yet either. Oh well, I'm not going to bore you because I'm not the pro at this particular industry. However, I think there's something there with this news. It just sucks to buy the rumor, right, if it doesn't come true. But I think long term, if someone told me that they had a bull case for a specific one of the cannabis stocks, and they told me they were going to hold it for 10 years no matter what, I could see it. I really could. It's just hard to understand which one is going to be the true winner. All right, Igor sold Alibaba for the tax loss and bought KWeb. I like that move. I like KWeb a lot. If I bought anything Chinese, that would be the ETF I purchased for sure. And hopefully you still gain on the long-term outlook when those Chinese technology / e-commerce stocks come back. Efren, I can't comment on space, and I haven't understood any fundamentals in that industry. With today's earnings call for PayPal, since they missed $50 million in revenue, will the price drop? So it was a tiny miss in their world. The bigger thing will be that they had a very slight downward look at their guidance ahead as opposed to others, analysts and most likely. I don't see a huge drop with PayPal, certainly not a huge drop, because they were smart enough to throw in that Amazon news to kind of lead things off, right? Let me see where they're at right now. It's down less than 1% in after hours, 0.37. But I think you throw in the Amazon news and you've got something. You've got a stock that shouldn't fall too far. Now, it's not the cheapest fundamental stock of all time, I'll tell you that much. You got to assume 2-3 years on this. I wouldn't buy it if you're looking for an earnings pop up or down. I would buy it for much longer. That's what I'm doing. All right, last one from Efren, Roku. He's looking at Roku. How do you buy Roku? I have Roku TVs all over my house. I probably should have bought them. but gosh, I just don't know how I can get excited with all these vendors potentially bailing on them, right? Google, which also includes YouTube potentially. There was rumors about Amazon pulling their little widget off. So I don't like that, and it scares me for the long-term future. The Roku channel as a free channel will always do well, right? But the Google and Amazon, and let's just assume Apple will be assholes, at some point too. That's scary. And so Google doesn't even need the money. That's what's sad. They don't need the money, and they'll just pull their widgets if it gets to that point, and they'll be fine, and they'll just walk, right? And that hurts Roku way more than it hurts Google. Same can be said for Amazon. The same can be said for Apple. I really hope that they come to an agreement. And if my name's Roku, if you do come up with the common ground for Google, for Christ's sake, make it a 10-year deal. Don't go through this every year, okay? Do whatever you have to do. If you're growing like you are, make it a 10-year deal. Because if it's a 1-year deal, you're going to be in the same crap next year. We know how it goes. Derek, yes, SDC is officially sunk. I have to figure out what I do before the end of the year. Good news, everybody. I'm not bankrupt off that. Thank God. I didn't have some like 10,000 share bull case. At the end, if I get 0, which is unlikely, but if I do get 0 for my SDC, it'll be $3,000 or less loss. But I'm done. Absolutely absurd what those guys did. So, all right. Well, thanks everybody. Good news for me today on PayPal. Regardless of what the price does, I'm happy with it. Bad news on SDC. Frankly, who cares? And then Trade Desk, keep your eyes open on these advertising stocks. Remember what I said in the middle of the show. Automakers have no trucks to sell, so I'm sure they're pulling back a little bit on advertising. Travel, 0 travel advertising, but it's probably about to ramp up. And then retailers, I expect will jump in very soon as well. So keep that in mind. I think advertising is a good play going forward, but we'll see. All right, have a good day, everybody. We'll see you on the next video.